I am Myles. I've been joined, as always, by Julie Hyman and Brian Sozzi. It is Jobs Day here in America. The final jobs report of 2020 coming out earlier this morning, showing a weaker than expected state of the labor market in the final month of last year. U.S. economy losing 140,000 jobs. The unemployment rate remaining unchanged at 6.7% as we limp out of 2020. Certainly that stimulus that was just passed should help things in the months ahead, but clearly the virus remaining in control of the economy. If you take a look at the stock market here in the early going, though, we see all three majors are higher, and those are record levels for the Dow, the S&P, and the NASDAQ. They closed at record highs yesterday. This coming during the first full trading week of 2021 and a momentous week it has been. And so let's keep our attention there just on this week as a whole, and talk a little bit about what we wrote about in the morning brief this morning here at Yahoo Finance. If you don't subscribe yet, you can sign up on our site, get that to your inbox every morning. You see the, I don't know if it makes me look old or young, that little cartoon, but myself and Sam Rowe writing that newsletter. And really what we tried to do this morning was not look at any one thing, but look at all the things that have happened this week. The way that we termed it was kind of a year in a week. You've got Bitcoin at 41,000 right now. That's at a record level. The stock market, that's at a record level. There's also a mob entering the Capitol and sitting in Senate offices, sitting in representative offices, sitting at the head of the Senate. Kind of lawlessness basically down in the Capitol. Also, while we have election results coming out of Georgia that now give Democrats control of the White House, the Senate, and the House of Representatives. So you have a major change in potential fiscal outlook here in the U.S. as we continue to work our way out of this pandemic. And, Julie, the calendar a week ago today turned from 2020 to 2021. Everyone said, great, so glad 2020 is over. We can finally leave that behind us. And in many ways, this was kind of the craziest week. I mean, it wasn't because there was the pandemic in March, but this was as crazy a week as you could have imagined to kick off this year. I guess, chalk one up for team arbitrary calendar markers don't really matter.
Yeah, most definitely. This was the most 2020 week of 2021 thus far. And yes, with all of these things going on, and in some ways, the logical conclusion and playing out of a lot of these different trends, most notably in Washington, I think, as we come to a close with the presidency of Donald Trump. When I speak of logical conclusions, all of the rhetoric that he has fed to his followers for the past 4 years, reaching its apex or its nadir, depending on which way you want to look at it, in the storming of the Capitol building this week. And I think in the eyes of market participants, it didn't necessarily have implications for the markets directly, but the thinking out seems to be that maybe it made a stimulus bill even more likely, coupled with the Democrats' victory in Georgia, because you get some sort of at least temporary solidarity and feeling of goodwill on the part of Congress. Now, I was just looking at some of the returns as we kick off the year. The S&P 500 is up 1.7%. As you mentioned, we've got the major averages at records. We've got the Russell 2000 at a record also, and that continues that hot streak that small caps as well have been on. But then you also have some things that were not necessarily in place for all of 2020. Crude oil, for example, is above $51 a barrel. We had OPEC Plus coming to some agreements this week with Saudi Arabia agreeing to production cuts. So that's notable as well. And then that 10-year bond, right? 1.1% is around where we are right now on that yield on the 10-year. And I think the Fed is very, very much on investors' minds here as we start off 2021. So a lot of different threads to pull on as we kick off the year. And I know, Brian Sozzi, you're pulling on another one that we watched quite a bit in 2020.
Yeah, and that's Tesla. Amidst all of this craziness, Elon Musk is now the richest man in the world, despite only a few quarters of profitability, which could be called into question, depending on how you measure their profits. But guys, outside of Tesla, you know me, I'm constantly looking for the pulse of corporate America. And just look what CEOs and companies have announced this week. We just had Bed Bath & Beyond CEO Mark Tritton come on and say, you know what, we're seeing positive trends in our business in January. We talked to T-Mobile CEO Mike Sievert yesterday. He said we might find double the cost synergies from our business in 2021 from 2020. And oh yeah, we had more subscribers than we expected in the most recent quarter. And coming up next, we'll speak to Constellation Brand CEO Bill Newlands. Well, you know what? He just reported a quarter yesterday that blew the minds of Wall Street. Beer sales strong, wine sales strong. So despite you see the headline jobs report down 140,000, corporate America, depending on the company, seems to be doing okay.
I like that little thing we have on our Chiron, 1 down, 51 to go. I don't know if that's encouraging, discouraging at this point, just a marker of how long it is ahead of us. And, Sozzi, just to pick up on the Tesla point, I just sort of wonder sometimes if maybe it's still an underrated story, sort of what has happened at Tesla and with Tesla, because, I started covering financial markets in 2012. Even then, it was like, this thing's going out of business. This isn't going to work. This guy, Elon Musk, is crazy. The story hasn't really changed in 9 years, but the stock is now an $800 billion company. The stock is at record levels, split adjusted. It's a couple $1,000s a share. Cathie Wood is now looking like a genius on this thing, and it's just wild to see a name play such a prominent role in the market in the same exact fashion for pretty much a decade. I can't really think of another name that kind of kept investors' attention at this level for this amount of time, and it's kind of the thing you can't talk about enough. I know everyone gets sick of it, but really it's just an incredible financial and business story.
Well, next thing, Myles, the next positive shoe to drop on Tesla, they signal they're going to pay a dividend. Why not? Go all in.
Well, yeah, it's all that money that Elon's saving by moving for tax purposes.
That's right.
It's crazy until it happens.
Textbook teaches that a company is really just whatever the terminal value of the discounted future cash flows is, and those are often returned through dividends. So, I guess we'll get Aswath Damodaran on here to tell us about how to value a Tesla on that basis. And we'll have plenty of time to do that.